Hey guys, what's happening? Hope everybody had a great day. If you didn't, you're going to have a better one tomorrow. All right, so you guys remember we started this roadmap to success. Everything was beautiful, all colorful, bright. So how many of you picture looks like this now? And this dollar sign is getting like farther and farther and farther away. You got all of these roads that you see. You know, all of these are stuff you see on the internet, other things, people post in social media, other stuff you're following. That's what all of this mess here is. And what that does is it creates more of these questions and you get lost. And you just can't seem to stay on this straight and narrow path. Now, this path isn't straight. It appears straight. But we do have to make some turns. We do have to go around some corners. But compared to everything else, this is the straight and narrow path. So right now, most of you guys are looking at this picture versus this picture. Am I speaking the truth? So our goal in what this trader reinforcement series is going to deal with is it's going to be some hard lessons. And it's going to be some things that may upset you. But this is going to separate the traders from the pretenders. If you're pretending to want to be a trader, you're probably going to wash out, because at this point, this is where you have to start making these hard decisions. Like in the beginning, if it was fun, it was exciting, you had all of this anticipation, but after a while, if it's fate, the anticipation dies down and things start to look really bleak. You don't have fun anymore. And then you move on. In that case, you really didn't want to do it. So what we're going to talk about today are 5 reasons why you may not be achieving your trading goals. And these are legit reasons. These aren't things I made up. You've heard me talk about them before. And now it's time to get serious. So the reason number 1, you have not made the decision. Now, I know you decided to want to get into trading, and you decided to join this community, and you decided that you were going to put money in this account. But there's some key decisions that you have not made yet. All right, and you can't make a difference. You will never make a difference in your results until you make a decision. And you have to make that ultimate decision. You've got to make a decision to accept how the market moves. We've seen it. We all know how it moves. We know it's frustrating. It can drive you insane. But we have to accept the fact that there's no rhyme or reason to how the stock market moves. Now, we do have our technicals, and we do come up with the strategies, and it gives us an edge. But it doesn't move by technicals. It moves by people buying and selling. It moves on human emotion, over emotion, under emotion, makes it not move at all. You know, we saw today how the market was selling off, but then for a while, Apple and Facebook and all the FANG stocks were just kind of trading sideways for a while. And they weren't really following the market. That's people just indecision. You know, but if something starts to move and people panic, you're going to see big moves. Or the market moves a little bit and people get excited, you're going to see the market move a little bit. But we have to accept how the market moves. You got to make a decision to accept that. If you can't accept it, stop trading, because you're going to keep losing money. Even if you try to follow and mirror trade somebody, you're going to continue to lose money, because you have to accept how the market moves. Nobody's going to be right 100% of the time. And the second one, you have to make a decision to accept losses. If you can't accept losing and can't accept losing days or a series of losing days, it's not going to happen. And what happens, guys, is when we start to lose, we start questioning. I know, because you hear me question myself. That's one reason why I'm on the mic. So you'll hear me question myself. And I have to go back to that decision I made to accept whatever the market gives me. If it's a loss, I have to accept it. If it's a win, damn right I'm going to accept it. But that loss has to be accepted just as much as the losers. We learn from that. And that's a decision that we have to make going forward. We have to make a decision to accept losses. Here's another big one. We have to make the decision to accept personal responsibility. We have to accept it. And I'm going to recap the trades from yesterday. I saved them specifically for today. And you're going to see exactly what I'm talking about when you have to accept personal responsibility. Now, yeah, the buying power was messed up yesterday. I could have taken advantage of it, and it could have hurt me or could have helped me tremendously. But I made a decision to engage the market yesterday, even though I knew that SureTrader was having problems. All of us had the same issue, and it was my decision to trade. And it could have cost me dearly because I had a stop that didn't fire. Or it got rejected or whatever happened. I wasn't watching it, so I don't know what happened. But I had to accept personal responsibility. If you're not able to do that, it's not going to end well for you. So that's another decision right here and right now you're going to have to make, to accept personal responsibility. You're going to have to make a decision to stop comparing yourself and your journey to others. It doesn't match. Number two, unless you're sitting next to this guy and you're watching him actually do this, you're probably comparing yourself to a lie. And you don't want to do that. I know that the marketing strategies out there is to post these big gains, tell you how easy it is. All you have to do is X, Y, Z. You guys know the strategies are so easy. They're so simple. The hard part is executing. And if nobody's talking about that, those are the people you stay away from. It's not as easy as they make it sound. Or they may record a live trade that they took and they only show you the ones that they win on. And it's chopped up. And you know, as these trades develop, sometimes it takes a while. So that doesn't really give you a good feel for it. So don't compare yourself and don't compare your journey to others. It's you against you. Okay, when it comes down to this, it's you against you. So you have to make that decision to only focus on you, your growth, your roadmap, and your timetable. And it has to be realistic. All right, so you have to make a decision to give 120% or nothing at all. You got to give 120% or nothing at all. And I know you're saying, hey, I got a full-time job and all this. When I started, I had a full-time job. And that job was every waking hour that the market was open. But you have to set aside time to give where you could give 120%. That, hey, this is, you got your work time, you got your family time. Now you got to have time for your business, for your goals. You've got to have time set aside for that. And to do that, you got to give it 120%. If you don't, it's going to be very, very difficult for you to make it. You know, like I said, we're not the only ones out here trying to make this money. There's a lot of people out there. And it's not about how much time you spend. It's about how you spend that time. And if you spend 30 hours giving 60%, and somebody comes in and spends 3 hours and gives 120%, I guarantee you they're going to out-trade you. They're going to out-execute you, is a better word for it. So also, you have to make a decision to do whatever it takes to reach your goals. You have to decide right now, hey, I'm willing to do whatever it takes to reach my goals. However I need to move this around or adjust this, whatever it takes, that's what you're going to have to do. And you can't not make that decision. So make a decision today, or spend the next couple of days and make a decision so you start Monday fresh with the right attitude and, you know, with the right focus. All right, number 2, a lot of you, your goals are not clearly defined. And I know this doesn't speak to everybody, but a lot of people do not have clearly defined goals. You know, you have to decide, what does success look like for you? You know, are your goals for trading specifically defined? It's like everybody says, I want to be a millionaire. I want to make $1 million. And I've got a license plate that my wife bought me from Puerto Rico several years ago. You know, that says, I want to be a millionaire. That's my final answer. You know, that's a goal, but is it specifically defined? How am I going to get there? You know, what vehicle am I going to use to get there? Now that you're trading, what are your specific trading goals? You know, where do you want to be 6 months from now? Where do you want to be a year from now? That's why, guys, I started this roadmap with the trading business plan, because that's going to help you define your goals. It's going to help you understand where you want to go, because without the goal, you don't get the focus. The goals are going to be your focus going through this. And you can only make steps in the right direction if you know the direction that you're headed. If not, you're going to be going all around like these curvy roads down here and just going in circles, doubling back, you know, walking the same road again, driving that same road again. And then the whole time you're passing that path that somebody like me has laid out for you. I'm not the only one that has a path. There are other people out there that have paths, that they're sharing you the same road that they've gone down. and you guys know what to look for. I don't even have to go down that road. But you got to have a direction. You got to know where you're heading. So having goals is like having a map. And that's why I wanted you guys to start out building that trading plan. And a lot of people haven't done it, or they started it and they felt the questions were too hard and they quit. It's impossible to get to where you want to be without a plan. And in order to make a plan, you got to have a goal. So you got to have these goals clearly defined. The fact is, most people don't have goals. They have wishes. And there's no power in wishes. Goals are gonna help you have a concrete vision. That vision is what you're reaching for. And the goals that you have, they're gonna have that power. They're gonna have the power to give you that vision, to motivate you, to keep you focused, and they're gonna give you confidence. So it makes sense to have a goal, right? So the best way to visualize yourself achieving this goal is to see yourself working backwards. Picture yourself, visualize yourself at the finish line, at the end, at success. And then start working your way back, and you'll be able to see what every step you need to take in order to get to where you need to be. If you follow this roadmap, that's how I came up with this roadmap. Is I started from where I was now, and I worked my way back, and I gave you guys every bit and every piece. And unfortunately, not a lot of people wanted to follow every step. They wanted to try to take a shortcut and deviate this and deviate that. By now, you realize it doesn't work. All right, number 3. You don't trust the process. And this is huge, guys. A process is simply a group of steps, or just steps that we perform in order to accomplish a goal. The process is important because it tells you how to successfully achieve your goals. And it also keeps you focused and on the right path. Remember, if you don't have a goal, you don't even have a path to follow. So all of that works hand in hand. So how well you follow the process is going to determine how successful you'll be. And like I just said, some people skip some steps. They got on the road. Some people never did finish the business plan. And so right off the bat, they were on the wrong road. And if they came back further down the line, they missed out on the foundation. And without that foundation, you're not going to get very far. So if you focus on the right process in the right way, you can design your way to successfully achieving your goals. One thing about this, you're going to follow the roadmap, but as you grow and as you develop and as you get further down the road, you're going to start designing your own way. You're going to start coming up with things that's going to help you, but it's going to be in the right way because you followed the process and you're on the road, and the things that you come up with are going to help you stay on that road until you reach the finish line. So don't rush the process. You've got to trust the process. Trust the process. All right? Don't rush it. Trust it. Believe in it. Guys, like I told you, this path or this roadmap that I gave you, I can honestly and confidently tell you that this is a path to $1 million. Now, will you be a millionaire at the end of it? No. You're going to need to make $4 or $5 million before you can have $1 million in the bank and say you're a millionaire. I mean, that's just the God's honest truth. But this path can take you to making $1 million. Will you be a millionaire? No. Like I said, no. Because taxes are going to kill you. They're going to break your back. Plus, you've got other expenses along the way. So, don't rush. Trust the process. And however long it takes you to get there, that's how long it's going to take for you to get there. You know, sometimes we get in our mind that we don't have enough time, or we're running out of time, or we may, you know, we want to have more time to enjoy the fruits of our labor. But look, part of getting it is an enjoyable process. And that's part. The journey is once you've done and gone through the journey, that's going to be some of the best times of your life, some of the best memories. Yes, some of them are going to be tough. Those days you blew your account, you know, they're going to be tough, but they're going to be a distant memory. And you're going to laugh at yourself for the things that you did that caused that to happen. You understand what I'm saying? So, you know, don't rush the process. Make sure you trust the process. Now, some of you might get mad at me for this, but number 4 is you're not taking personal responsibility for your success. You have to look in the mirror and you have to ask yourself, why am I not where I want to be? Why am I taking shortcuts? Or what am I taking shortcuts on? What am I not doing or what I should be doing? Why am I not doing the things that I should be doing? There's probably a better way to ask that question. You got to be honest with yourself. If you don't hold yourself accountable for what you do, then it's going to be difficult for you to improve. Because you're always going to be blaming it on somebody else. You're always going to be complaining that this happened to me, or this caused me to fail, or whatever. That's not the case. We have to hold ourselves accountable, because every time we engage in the market, we make that decision and we take the risk. And those decisions that I talked about earlier, all of those decisions we have to be good with. If we're not, we shouldn't even be engaging in the market. It's just that simple. I think Matthew asked today about an accountability partner. That's the best idea that anybody could have. You know, you have an accountability partner, somebody that you can talk to and share things with. Now, I got an email the other day, and I'm not calling any names, but this is what this person said. He said, even if it's a simulated account, I feel heartbroken and stupid every time I fail. Maybe this is one reason most people, including myself, hesitate to do trade reflection. All right, right there, you're not taking responsibility. You're not, you're taking responsibility, but you're not holding yourself accountable. All right, you're not holding yourself accountable. You are coming up with an excuse as to why you don't want to do the trade reflection. The trade reflection is a key element in your growth. If you choose not to do it, it's going to be very difficult for you to grow, because you'll end up making the same mistakes over and over and over again. And the things that you should be learning you're not, because you're not writing them down. All right. And he said some people start doing it but end up skipping it completely. And that's true. Some people quit because they don't want to put in the work. Because other people have told them they don't need to do this. They don't have to put in all this work. You give me your money and I can give you this. And believe me, if there was a way for me to make you guys successful by you just giving me money, then I damn sure sell it. I'd be a millionaire 50 times over. How many people would take that deal? I know when I first started I would have. But it doesn't work that way. So, and some of the reasons that this person gave me was it's very painful to write bad defeats about oneself. All right. Now he's being honest. He's being honest with himself that it is very painful, but that's where the growth comes in. Okay, that's where the growth comes in. And trading too much can leave us with writing too many reflections a day. This is one other reason I quit. Okay, if you're trading too much to write reflections, then you're trading too much. You're taking too many trades. All right, so now if you take multiple trades on one stock, that's fine. That makes it a lot easier. But if you end the day and you traded 15 stocks and you're going to have to write 15 reflections, that makes absolutely no sense, because that tells me you've been chasing. And you guys saw me do that, what was it, a couple weeks ago when I had like 24 or 30 tickets. I can't even remember how many tickets it was. But that was a day where I came unglued and I had all of these doggone tickets. Now, the only thing that saved me was that I knew what I was doing in terms of trading. So I still ended up, I don't know if I ended up green or just a little bit red, but whatever the case was, it didn't blow me up because I was able to work myself through it. I didn't do a video that night because it took that long for me to go through all that stuff. But no matter what, you gotta hold yourself accountable. You gotta own your own mistakes. Everything that you do, if you make a mistake or you have an accident, you own up to it. Because that's the only way you're gonna be able to fix all of these things that you're dealing with. All right, so number 5. And you've heard me talk about this over and over and over again, because this is what ties everything together. You're not executing at your full potential. You must execute at 120%. Remember, the execution is the only thing that we have 100% control over. The market has nothing to do with our execution. Now, we execute based on what the market does, but we make those decisions. 100% we make those decisions, and we are responsible for them. So, yeah, I may complain about this market is garbage and, it's just not doing anything or whatever. I have no control over the market, but I do have control over the trades I take. And that's what I revel in. So understanding that we have 100% control over that. And the market can do whatever the hell it wants to do. It can go up, down, sideways, backwards. Can do flips. It doesn't matter. But it's up to us whether we want to execute in that market or not. And if it's not a market that's comfortable for us to execute, then what should we do? we should walk away. So some of us, we have a problem over trading. We have a problem staying out of the market when we need to. You know, we try a trade. You know, I'll throw a trade out there, just like Facebook when I left. You know, I threw it out there. It didn't work. So I knew then, hey, this market is just going to jump around. It's not going to give me the moves that I need to make any money. So just leave it alone. Just shut it down. Because I could have easily ended up, you know, losing money. But that's a decision we have to make. That's one of those decisions that we're going to have to make. Is that, hey, I'm not going to overtrade. You make that decision, you put it in stone, and you move forward. So going forward from today, these next classes are going to help you eliminate a lot of these issues that you're dealing with. A lot of these reasons why you're not achieving your goals. And we're going to look at, as simple as these trading strategies are, we're going to look at them. And just because they're simple doesn't mean they're going to win all the time. Because it's not the strategy, it's the market. The market we have no control over. It's going to go and do what it wants to. We just need to have our safeguards in place, which is our stop, to let us know when we need to get out, and our profit targets when we need to take profit. And all we need to do is execute on that. And it's really difficult to separate yourself from everything else and just focus on that, because we're looking at what somebody else is doing. We're looking at what somebody else is doing. You know, there's several people I've had to say, look, just stop DMing me and focus on what you're supposed to be doing. You know, stop worrying about what my trade is doing and stop giving me a blow-by-blow update of what my trade is doing. What are you doing? You know, that's the question. So understanding what we have control over is us, what we do in the time that we're in the market, our execution, our planning, all of that stuff we have control over. Nobody else should control that but you. And then when we get in the market, the only focus is executing that plan, whatever we have, executing it. If you're in a trade and you don't have a plan, don't ask me what my plan is, because my plan may hurt you. So you have got to get in. You've got to know, have a plan before you get in. Now, if you're not ready to trade, yeah, just sit back and watch. And, you know, ask questions at the end of the trade. That's perfect. But execution is not just about trades. It's about the time that you put in the market. Remember, it's not how much time we put in, but it's how we spend that time. And executing at 100% means that when we're not in a trade and we're looking to observe, if you're observing me trading a certain strategy, then that's where 120% focus needs to be. You know, so those are the things I want you guys to think about. Now, are there any questions dealing with these 5 reasons that I covered today before we move on into the last section here? All right, so either y'all are good, or you so mad at me you don't want to say anything, or you just walked away from the computer. Ryan, is what I talk about every morning. When, like this morning, for instance, this morning, we had all of these stocks that were in play. There were so many. What it does is it causes people to be spread out all over the market, and we don't really get good moves or good sustainable moves. Like, we did get a good move in GOOS initially, but then that was it. That move kind of failed because there wasn't anybody in there sustaining it. So these moves, when the market is spread out like that, you got to be careful. When you don't see a lot of volume in the indices, to start the day, and it's kind of flat and it's kind of choppy, then you want to pay attention to that. But there are things that come up that I see during the day or in the morning that kind of gives me an idea that, hey, I need to be careful about trying to trade. Or I may not need to be as aggressive. I need to be more conservative. So when I see stuff like that, I try to make sure that I point it out every morning, because that's part of the vetting process. What I do between 8:30 and 9, and even before, because I look at the market as soon as I log in, and then I'll come back maybe an hour later or an hour and a half later whenever I get back to my computer, and I look at it again, and I'm just looking at it. If it looks like a normal average day, then I would think that. But if it looks a little different, or if it looks to one extreme or the other, then I'm going to start looking at what's going on. All right, you're welcome. All right, so real quick, we're going to look at a couple of trades from yesterday. Let me see. You're trusting the process, but just getting caught on some bad ORB trades. Well, you just keep trading them, and you keep reflecting on them. Every one you take, you reflect. If it's a good setup and you did everything right, just file it away. And if you're starting to see, let's say over a period of 3 or 4 weeks, you're losing more than you're winning, then you want to look at what stocks you're selecting. Because I look at my watch list, and a lot of times the one that I picked, just like today, the stock that I picked to trade this morning, I picked it because I felt it had the best window of opportunity. But it was on SSR, and it was in the middle of a conference call. So when I look at that and I think about that, I was like, you know what? That really wasn't the smartest decision. I should have stuck with GOOS and traded it as soon as it broke the 200. So you're going to make bad choices on stock selection sometimes, but that reflection is going to remind you of the rules that you broke and reinforce the reasons why you shouldn't break them. But you don't want to change your strategy that quick. You want to give it several weeks to a month for you to actually trade it and get some good data. And then you start working from that. Because if you trade a week and say you lose 5 times and you win 2, and you're like, I need to change this, and then the next week you don't win anything, and you're like, well, what did I change? And you just start changing different things, and it just doesn't work for you. you end up getting more lost than you were before you made the change. So in the market, you got to be consistent. Like right now, the last couple of weeks, we've been dealing with the uncertainty with the economy and China, and now we've got more stuff. You know, the tensions between China and who is that? Taiwan. So there's always gonna be something. You know, we just have to stay on top of it. Hong Kong, that's right. So we don't want to make wholesale changes. We got to be consistent. And I've shown you that for the last 2.5 years, almost 3 years now, that I'm not going to change. I'm not going to make wholesale changes. On my opening range breakout, the only thing I may do is adjust the time frame. I may go to 3 minutes or I'll go back to the 5. That's it. You're not going to see me adjust much. All right, so let's take a look. Yesterday, this is on Roku. This was an opening range breakout. 5-minute opening range breakout here. We put in the 5-minute opening range. This candle opened down here on VWAP. I bought it on the break. This is textbook. We did have a big pullback here. And of course, because this was a perfect setup and a perfect entry, what did we expect? Perfect results, right? And that's very wrong. We cannot have these unrealistic expectations. Just because it's a perfect entry, it's not going to be perfect results. The trade is going to do whatever it wants to do. All we need to do is be there to either stop out when we're supposed to or take profit when we're supposed to. And this is what happens when we make a perfect trade here. We scale out looking for it to go up as far as it can go. And then, you know, as we come back, we can take it off, or we can let it hit at break even, or it just depends on where support is. If support is under your break even point, then you probably just want to take it off and then try to buy it off support. So here is my attempt at buying off support. Now let me see if anybody can tell me what I did wrong here. Now at the time I thought it was perfect. And because it didn't work out, of course I got pissed. So what was the problem here? You got it. I never waited for this to break the high of this candle here. Here's a candle that is confirming the hold of VWAP, or it's attempting to confirm the hold. This candle, I should not have entered until we broke the high of this candle. Now, had I entered when we broke the high, you know, it should have been up here somewhere, right on this level here. I didn't realize that at the time. I was anticipating this thing was going to rip back up, make new highs, and, you know, I was going to be dancing for joy here. But I jumped the gun. So I had to accept the fact that I made a mistake here. And this is when you do reflection. Had I not done reflection, I would have been pissed and said this just didn't work. This was a good setup, it just didn't work. This was not a good setup. It didn't confirm the bounce, and there was no reason for me to take it. So ended up getting stopped out here. All right, look at this one. This entry is even worse. And to think I felt good about it. This never did close above both of the moving averages. It never did. It was going up when I got in. when I got in, it was going up. This was a solid green candle, which of course had me excited. But this is what the market does. If you don't stick to your rules and you are upset about what you thought was a perfect entry that went wrong, this is what's going to happen. All right. And then you're going to stop out and you're going to get mad and go short for no apparent reason whatsoever. All right. The only reason, this so happened to work out for me in the end, it just so happened to work out. And I was able to actually make all of my money back on it. I mean, not all of it back, but a lot of it back, put it that way. I was able to make a lot of it back. But the fact is, had I not sat here last night and went through these trades, I probably would have been out of control today. And I wouldn't have been able to manage or, maintain my day. So that in itself is a big reason why you want to reflect on your trades every day. Take the time to reflect on it. Take the time to learn from your mistakes. And there's nobody else that should be any more embarrassed than me when I make these mistakes in front of people live. Okay, with you doing it and nobody's watching you, you should not be or feel embarrassed to share these things with me at all. If I'm willing to put myself and embarrass myself out here every day, you guys shouldn't have a problem sending me your trades. I don't care how screwed up they look. Us talking about it and working through it is what's going to get you better. If you keep looking at your same screwed up trades day in and day out, and you don't share it with anybody, you don't talk to anybody about it, you don't have an accountability partner, somebody, your peer that you could work with, how are you going to get better? How is that going to make you a better trader? Your stop on the opening range breakout is always a loss of the opening range level. In this case, it was an opening range high. So my stop was going to be a loss of the opening range high. So every time that it's always that. And see, we're going to talk, max loss if it hits the max loss. If it's running away from you and hits your max loss, you got to stop out. But as a technical stop, it's always going to be that opening range high. Or low, depending on which way you're going. Yeah, if it closes below it, yeah. It has to close below it. And yeah, when we talked about the stops, the last couple of classes, that tells you how much room you need to give it. Each stock is going to require different amounts of room that you need to let it work. And we talked about how you have to figure that out. So no two stocks are going to be the same really. You're going to have to be able to go through that process to determine where your stop is, how much room you have to give it. Now, the technical stop's always going to be the same. How much room you need to give it so that it doesn't stop you out on your max loss stop is the decision you're going to have to make. All right, so for AAP, this one was no Apple. No, AAP. AAPL was an accident. You can see it actually closed itself. I don't have it on here because I had to break it. It here it is. You can see 6 seconds. It actually closed itself. So that's why the only loss on this is just the commission, is the really the commissions on it is what we took a hit on this. But here you can see we broke out over the 200. We bought it. It didn't quite make it to this level, but as we're coming back, I covered it, bought it again off the 200, and was trying to set my bracket order, not bracket order, but range order, and messed it up and got taken out and had to buy it back. And then, really good, covered some here. First target, red to green, up through 143, and then back, stop at break even. So, that did pretty good. So yesterday, the main thing about yesterday was, understanding where you made a mistake and knowing that in the heat of the moment, you may not even see it. To you, it may be perfect. To me, this was a perfect entry. This was a perfect entry. But it wasn't. And I realized that when I did my reflection. This was not a good entry. This was, I'm going to get my damn money back entry. It just so happened that it allowed me to get a lot of my money back. But this could have easily gone on back up and I'd have been stopped out again. So it's understanding, being able to reflect, look back, accept your mistakes, take responsibility for them, and then you fix them at night. That's all part of that reflection process, part of that sheet that I shared with you. All right. If it doesn't have a catalyst that day, I don't trade it. I don't care what it looks like. Unless I could find a catalyst, and it may be reacting to the catalyst from the previous day. Roku is always reacting to some catalyst. There's always something causing it to move. If it's moving. But unless I can find a catalyst on something, I'm not going to Michael, it's growth. When you're first learning how to trade, you're not going to be able to do that. So you have to do the one trade a day thing. Because you're trying to get comfortable in executing and not allowing what happens on the first trade to affect you the rest of the day. And it's not just a loss. If you have a nice winner, that's going to, in turn, if you're not comfortable with winning yet, if you're brand new, you're going to get overly excited and you're going to get too aggressive and you're going to end up losing it all back. If you lose, it's just the opposite. You could get mad and you're going to be looking for a trade to try to make your money back. and you dig yourself deeper in the hole. Okay, for me, I've got a ton of experience, and I know how to trade my way back out. But I also know when the day is not conducive to me trading my way back out, and I walk away. But those are the skills that you have to learn. And as you go through this roadmap, you're gonna pick them up. That's why I'm so adamant about people not trading certain strategies until you learn how to trade the basic one. I can't tell you how many people have blown up their account trying to trade earnings when they can't trade a simple opening range breakout or breakdown yet. And it's simple, but executing it is very, very tough. So as you are growing as a trader, you're gonna get better. You're gonna learn how to win. You're gonna learn how to lose. You're gonna know when to push the envelope. You're gonna know when to be conservative and when to throw in the towel. These are things that come with experience. I can't teach you that type of experience. I can teach you how to make the decisions, the things that but the feel has to come from within you. You're gonna have to get that feeling from the market when it's trying to tell you that. Yeah, and most people, when they're first starting to trade live, they'll do that one trade and then they'll go to the simulator. Or just paper trade, or just write down, what they would be doing if they don't have a simulator. I would just sit there and write down where my entry would be and what I would be looking for. It's pretty much the same thing. So I'll know whether the trade worked or not. But you're right, money management does make a huge difference. And that's part of execution. Oh yeah, I do it too. I mean, yesterday, look at what I did yesterday. Really nice trade. I had over $200 locked in, I think. If you calculate this, like over $200, and gave it right back, and then gave back some more. So it's gonna happen. It's just a matter of being able to respond. If you're not at a point in your career yet that you're able to respond the right way, then it's best that you chill. Just shut it down. When you get that experience, you're going to be deadly because you're going to have the discipline to go along with it. My two most valuable tools that I have is patience and discipline. And sometimes they do fail. I may break them and I have to replace them for the next day. But patience and discipline are the most valuable tools I have in my toolbox. And plus, I'm fortunate enough to have had the Thinkorswim that allowed me to use that on demand at night. And that was where I built a lot of my screen time experience from as well. And because I worked full time and I wasn't in the market all day, I was only in the market for maybe an hour and a half total for that day. And so I had to get screen time somewhere. So that, or any type of market replay simulator, I think Trading Sim is going to start having pre-market data, which is going to help. All of that, everything we do is built off of pre-market. So we got to have pre-market data if we're going to be working at that. All right, guys, we got an hour in. I'm going to stop the recording here, but I'll still be here to answer questions.